Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of September 23rd, 2013. Hello, I'm John Thomas from Primary Residential Mortgage, here to give you your update. Well, last week, end of the week, very good for mortgage rates. Mortgage rates dropped lower to end the week. If you look at the bond chart on the screen, you can see that huge, big green candle. That was Wednesday, and that was after the Federal Reserve made their statement to the markets, saying that they would not taper the bond buying program. So bonds and stocks rallied. Bond jumped higher. Biggest single gain since August 2011. And then the end of the week, we kind of came off those highs a little bit, because if you look there, that big blue line, it's a huge line of resistance. There's a bunch of things going on there. Big line of resistance, 100-day moving average. So they call it a quadruple top. That's a tough ceiling to break through in order for mortgage rates to move any lower. So we are going to recommend locking your Delaware mortgage rate to start the week, because we've already moved slightly off that high set on Wednesday. So lock your Delaware mortgage rate. Now, long term, 60, 90 days out, you could float, but shorter term transactions, 30, 45 days, would definitely recommend locking, because short term we see rates moving slightly higher from this big surge lower. Now, if we dig into what happened, the Federal Reserve had a two-day meeting, started Tuesday. On Wednesday, released a statement. The whole market was expecting them to announce starting tapering their bond buying program. Right now, they're currently buying $85 billion worth of mortgage-backed securities and treasuries every single month. We thought they were going to stop, maybe cut back $10 to $15 billion in off the treasuries. Well, they surprised the market by announcing they're not tapering yet, citing the economy is not strong enough to support the tapering. So that took the market by surprise. Good news. The market had already baked in the tapering, so that's why mortgage rates in the last couple of weeks had moved higher. Well, now they moved back lower. Okay, in the other news, we saw the weekly initial jobless claims come out on Thursday. Again, came out lower, 309,000 claims, up from 15,000 from the 292, which was ridiculously low. But still, two states are trying to process a backlog of claims, so that's skewing that number. So hopefully this coming week we'll get the actual number on claims to see how the labor market's doing. And then in the housing, we had a bunch of housing news released last week. Most of it was all good. First of all, housing starts for August 2013 rose by 0.9% from July of 2013 to 891,000 units. Now, that was below expectations of 910, but the lower number was all because of multifamily starts, housing starts dropping, not single family. Single family is actually moving up. And then the building permits, which is a sign of future construction, that dropped 3.8% from July to 918,000 units annualized. But again, the drop in building permits was from multifamily, because single family actually surged higher. So this is all good news for the housing market. Builders are feeling good. Builders are selling more lots. They're starting construction on more homes. So that is good news for the housing market. We also saw existing home sales for August 2013 reported came in better than expected. Existing sales were up 1.7%. And home prices for August 2013 were up 14.4% from August 2012. That's a huge jump in home price appreciation. We've been telling you, get out there and buy your home. Home prices are going up. They're going to keep going up. And the reason why they're going to keep going up is the inventory. Inventory is currently at a 4.9-month supply, which is not a big supply of homes. So that's going to put price pressure on homes to keep the trend going up. Now, we can't expect 14% appreciation, but we are predicting next year, 2014 to 2015, still 6 to 7% appreciation because of the lack of inventory. The other big news out of the report was distressed home sales only accounted for 12% of the sales. That's down from nearly 1/3 of all sales, which it has been. So great news on the housing front. Housing is still having a strong recovery, so it's still a great time to get out there and buy homes, because they will appreciate. We are still about 17% below the high of 2006. Now, in the local news, the next free first-time homebuyer seminar is Saturday, September 28th. That's in Dover, Delaware at the Holiday Inn on Route 13 from 10 a.m. to noon. And then the next one in Newark is Saturday, October 12th. That's at the Christiana Hilton Hotel in Newark, Delaware from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyersseminar.com. Look forward to seeing you guys next week.